Hello again, everyone. This is Joe Hentges with Beyond the Chart. And in this options trading tutorial video, we're going to take a look at Apple and a trade that I put on for my insider members back in June 14th. So mid-June, and this is the picture right here. This is 2016, and here's June, so here's where we're talking about. So on the evening of June 14th, this is exactly how I publish it for my insider members on the Trade Ideas page. This is taken off of that. I keep a Google document that keeps track of my trade ideas. So this is what we did on June 14th evening. I saw the setup of two consecutive closes below the 10 exponential moving average here. And so what I was looking at was a break of the two-day low in here, which was low was 96.75. So I said sell at 96.74. I suggest an option. Here was the closing bid and ask on that option, so they have an idea what the price range is on that option. And then I suggest a stop, and I have an initial target of 93.26, which was down right down in here. So we didn't get an entry, so it was on the 14th. The next day did not get an entry, did not come down and break that low. Kept the trade idea open, and on the 16th it did hit the initial entry point in here. And notice how it then pulled back up and gapped up a little bit. Well, that didn't seem to matter. The next day it just gapped down. Or not, didn't gap up, it rallied up, and then it gapped down on the opening next day. So on the 16th, bought to open 2 July 97.5 puts, okay, at the ask. I always, in the trade ideas, I always buy them at the ask and sell them at the bid for conservative purposes, just to show that, okay, you know, you need to try to beat that by beating the spread. Now, in some of these stocks like Apple, Facebook, etc., they're very, very liquid, and the spread between the bid and ask can be very, very tight. So that's sometimes that's not an issue with these highly liquid stocks. All right, so here's the suggestion, and I always just do like 2. In this case, I was doing 2 because I will like to just, as an example, hold half and then let the other half ride. So the target was 93.25. So on June 24th, which is right here, that target was hit. So what did we do? We sold half the position, which was 1 at 475 bid. Okay, so in this trade idea, I'm actually covering, you know, that difference, the spread between the bid and the ask. So what did we end up seeing here? The stock actually dropped from this low down to 93.26. It was a 3.6% drop in the stock price, and the option went up 70% in value, from $279 to $475. Okay, so now I had to stop on a close greater than 93.42 or break even on the option. Once we've captured a nice profit on the first half, I'm not going to let it the second half take away from that. So it's going to, worst case, break even on the second half. So then on the 28th, at this close here, right at the close, we sold at the bid 4.05. So what the result on the trade idea was $1.61 per contract, or 57.7% on the trade. So it turned out to be a very nice profitable trade, and we were in it for a total of what? 1, 2, 3, 4, 5, 6, 7 days to hit the target, 9 days out. So almost 58% profit, 9 trading days. All right, that's it on this trade idea, and I'll be having more of these as examples from the past few months coming out, so stay tuned for that. And if you're not watching this, well, actually, this is not on my website. This is here on YouTube. So head on over to the website, check it out, and check out the membership so you can see what the insider members are getting, and would love to have you join. All right, this has been Joe for Beyond the Chart. Talk to you on the next video.